Gold is being pulled in all directions this week after slumping to an 8-week low as political uncertainty seemed to vanish with the election of France's new president, Emmanuel Macron. But there's now a new uncertainty, the sacking of the FBI director James Comey by the US President Donald Trump. Lots to talk about. John Butler of Gold Money is here with me now. As I say, gold is being pulled in all sorts of directions. Do you think the Trump factor is the main concern right now?
Well, I think gold's getting a bounce today in part for this reason. That is, firing the director of the FBI is a big deal. I mean, the last time something of this magnitude happened was under the Nixon administration, and we know how that ended up in the end, right? So certainly it does raise the uncertainty level. I mean, keep in mind, when Trump was first elected, of course, uncertainty was very high. Everyone thinking, oh my word, now what does this really mean now that it's happened, surprisingly so? But then things settled down, and then a bit of routine seemed to set in. And in fact, he suffered a couple major setbacks in the Congress, suggesting that perhaps Trump is not going to be some all-powerful president who's able just to do whatever he wants. But wait a minute, here we go. I mean, he's doing something which is a big deal, and I can see gold getting a bounce from that.
Because the interesting thing about this is it's not the fact that he's actually sacked him that's got anything to do with the markets, it's the uncertainty factor that impacts the markets, right?
Absolutely, absolutely, and gold always benefits from that. And in fact, that's the best explanation for why gold fell back down to nearly $1,200 an ounce in recent days, because a lot of uncertainty had been removed. As you mentioned, Macron was elected in France. He's seen as a relatively safe pair of hands vis-a-vis what Marine Le Pen might have been. But then also look at gauges of market risk, like the VIX index, which has traded with a 9 handle for the first time in years, suggesting a tremendous degree of complacency in equity and risky asset markets generally. That should normally depress the gold price somewhat.
Okay, so what's going to happen to the price now? Is it all about geopolitics? We've got the North Korea threat ongoing.
Clearly, those factors are important, and they're not going to go away anytime soon. That said, there's also a lot of volatility in economic data. You've seen a bit of strength in Europe, but a bit of weakness in North America. But where you're really seeing it, specifically in North America, is Canada. And then you're also seeing it in Australia. These housing markets are starting to roll over. Now, that said, these housing markets are not as large as the U.S. housing market was back in 2007, 2008, when that was rolling over. But you can't dismiss this. These are bubbles that never corrected back then, the way many other bubbles did. So that could also be a future source of uncertainty.
Okay, and what about the technicals? How are they looking for gold right now? Well,
actually, gold has fallen to this level of around about $1,200 an ounce so many times now, but it's pretty much always found support. Sometimes it has to get under 1,200, indeed a few percent below that, but invariably it goes right back above it again and tries to push 1,300. This range is getting narrower and narrower. It's what technical analysts might call a pennant formation that you're getting stuck in. And at some point, gold's going to break out one way or the other. Now, with the VIX index of equity risk trading with a 9 handle, which is extremely low in a historical comparison, I have a strong bias for the breakout in gold being to the upside when we finally get out of this range.
Okay, and what could make it come out of this range? I mean, a Nixon scenario with Trump?
Of course, or things with North Korea spiraling out of control, or I mean, there are a lot of factors out there. Now, I don't want to suggest that it's all doom and gloom in the world, but markets are complacent by any reasonable measure. Look at price-earnings ratios. Look at other measures of valuation for stock markets as well as bond markets, where yields in historical comparison are obviously very low, especially when you look at the rising inflation trend and think of yields in real inflation-adjusted terms. They're extremely low. So you've got extremes everywhere. And as a general rule, when a lot of things are at extremes, there's a lot of potential for surprises, and gold would benefit from any of those in principle.
Okay, and what wouldn't it benefit from?
Well, that's the thing. If you actually get a resolution of the North Korean situation, China and the U.S. doing some sort of deal to de-escalate it, if you get some greater certainty around France and Germany and other EU countries working together to try to solve the internal imbalances around the euro, as a result perhaps of Macron's election, there are some material things that could happen that would clear the air and would justify current valuations. But that's the point. You almost need to justify them. It's if markets are already priced for good news, and it's not clear, in my opinion, that's going to happen.
Okay, we'll leave it there. Thank you very much indeed, John Butler, talking to us today about the movements of gold this week.